Hi guys, this is Jimmy G, and this is lesson 5 of the True Way strategy by Jimmy G, myself. Okay, so let me share my screen. Oh, okay, shared. Alright, now this lesson is based on rejection of the zones with price action or price patterns. Now, there's lots of patterns and stuff for price action, but I personally do not like bullish engulfing or bearish engulfing candles, as I don't feel that they're consistent enough. Like there's a lot of fake outs in these zones to make myself personally. But I do like wicks. That's basically what I trade off, because wicks to me is a true rejection of areas. So if it hits like a support line and bounces up, or if it hits a resistance line and falls down, then that gives me an indication that it's valid in my mind, or if it hits trend lines as well. Right, so let me show you some examples. I can go back a bit. Using the 50-minute charts, you can use hourly charts as well, or if you want to use multiple time frames, which is best, that's also a good idea to use. So if I'm looking, I'm not sure how far this line goes back, but you can see here, I know that this has already happened, but I'm just showing you an example of how these lines work. You know, this is my strong line, the blue line here, and it got rejected here by the 3 wicks. So this gives an indication after the first wick didn't touch, second wick touched. But if I seen a third wick, I would take the price down. And I didn't write to draw a zone here, but I'll show you another one. Here is another one you can see here. This one came up all the way, came into my, so the light grey area is my zones, the dark grey is not. So it came into the grey area, and you see this rejection, it came up, popped outside of my zone, then was rejected, and it's starting to fall, so I would have entered right about here. And for me, if all I knew, it could have fell down a lot, but it didn't. It would have got almost 39 pips. So that means for myself personally, with my trade management, I would have made profit, as usually I would wait for it to hit 20 pips, then set it to break even, and then at 30 pips I would set it to 10 pips, so, or 32 pips I would set it to 10 pip profit, so I would have made about 10 pips, or I could have been out early, but I didn't take this trade, so I don't know. And you can see here it just played around the zone, so I would have just avoided it for now. But I would be waiting for it to break out of this zone, or break up to the above. Right, so you can see here that it could have, see this candle here, it was like strongly going up again, and then strong down. And here you see this was a 1, 2, 3. When I see 3 candles like this breaking out of the zone, I tend to think that that's a strong movement. So I wouldn't have taken it due to this wick, and it didn't break out of the zone. And then here's another strong movement going up, so, and it was a strong candle, because you can see here before previously it was rejected with wicks at this level. But this is for binary options, of course you could take these trades, but here it closed above the area, so I would be thinking it's going to start to go up now, but it didn't break out the zone, so I wouldn't have entered right away, or I could have entered even, but I would have been I would have probably been stopped out at 20 pips. But you can see this is a clear breakout. It's a hit off the resistance line that I've drawn. See, this is an old resistance line, but I just keep it there. So it bounced off it. 1, 2, strong, really strong movement out of the zone. So this would be an indication for me to take a buy. So I would have waited for maybe a retrace. So I would maybe have not gone in that trade. But usually after that happens, it could retrace back down and then pop up. So I'm not sure would have been in that or not. Probably not actually, because it didn't retrace. So I'm very strict when I trade. I wait for even to the pip, which is sometimes my downfall, and sometimes it saves me. Anyway, so just going a bit forward, looking, so you can see here's another rejection of the zone. This is a nice one because it popped in at the beginning of the zone and it was rejected. So I could have been in here, but I would, for myself personally, I would wait for another hit of a wick. Like I like double wicks. So you could have been in here. You can see it's followed down. Could have been went straight for that zone. So about 100 pips could have been. And it came up, another rejection. See, it popped right out, fell back in. This could have been thinking it's going to be going up, but it went down. And I'm not always right, but this gives me a good highly probable setups. Like the bottom of the wicks here, this is a good area to get in here. Another area would have came down, hit the zone, then a big rejection out of it. So I could have been in here somehow, or maybe not. And falls down out of the zone, plays around the bottom of my zone, and then pops out. But I can't see any really good trades. But remember also, there's if there was a trend line here, I would be taking it as another confirmation. Or if I had Fibonacci's, that would be another confirmation. So here into the zone, here's a nice rejection at the top. So that could have fell all the way down. Could have been in for maybe 30 pips. And then came out, hit this trend line in my zone too. So when this happens, I might set a pending, or I would just take it if I see it, or have an alert set. So if I was in this trade, I would have been out of profit by 24 pips. So if I had a 30 pip stop loss, sometimes I have 20, sometimes 30, depends on my risk appetite. So 30 would have been okay, but 20 would probably stopped out. But I would have probably been back in this next trend line. So even say if I had a 20 pip stop loss, so here, maybe I put it here, so 20 pip stop loss, I'm out around just at here. But then seeing it come down again, I would have entered straight in. This was during news, so this is good indication as well, because news is always rejections of areas, like strong areas. Right, so looking back down, came just playing around the zone, hit of the trend line, hit the trend line once, came up, maybe 40 or 50 pips, 40 pips, came back down, another area, another 30 pips, and you see it's been bouncing from this area to this area. Nice rejection, come back down, 20, 30 pips. It depends on your bias. If you're thinking only going up, you'd go up, only take your trades going up. If you're thinking of going down, only take your trades going down. What I would say is that don't take it up and down, up and down. Well, you can, but to myself personally, I don't. And then rejections. See, it just broke out this zone, so I could be looking for a put if it was to come back up the next candle, but it didn't. Came back up, and here's a nice rejection. See, this trend line. Oh, sorry, this trend line wouldn't have been drawn yet. Right, so let me go to my current trade that was live. Yeah, during the Bank of England statement, I had a trade when it hit this trade here. I took this down. I got 60 pips in this one, so that was a live trade, 60 pips. Right, so right down here, I seen the rejection, and then shot back up, but I wasn't in that trade going up. I mean, if I was in that trade going up, I would have made about 94 pips or less, but I was only going down because I believed that GBP/USD would drop down, and so I was waiting for it to hit here. I seen this rejection here, hit off the trend line. I didn't get into the trade until here, at the top of the zone. Oh, actually, the top of this pair. Yeah, I was in here. So this is, I seen it pop up and then pop back down. I was in here, and then it came up about 4 pips and then dropped over 100 pips. But I didn't collect. I collected 71 pips in this position. I collected what is it, 71 pips? I must have been in here. I just exited this trade not long ago. I exited about here. So my entry, it must have been about this area. Right, but with the broker spread as well. So my entry was about here, but it doesn't matter. What I've seen is it rejected this area, and then it was coming back into the zone and falling. So I took the trade all the way down. I seen the rejection here, so it made me a bit iffy about getting out of the trade or in the trade. So I seen it playing around the zone, so I just let it settle. Then I seen this little pattern here, and this made me wonder like to exit the trade. So I did exit around this candle here, or this candle. Around here, I exited. So maybe it was a good idea or maybe not. So to me personally, I think it's gonna hit this line, maybe go back up, play around this area for a while, and it's gonna hit the trend line when it's gonna hit the zone at the same time. And then after it does that, let me show you. And then I think it's gonna hit the trend line, and I think it's gonna fall. But that's my own personal trades, what I'm waiting for. So I'm waiting to hit the zone with the trend line. So after what time? 6 my broker 6 p.m. 4 p.m. So after London close. After London close or during London, just near the end of London close, I think it's going to hit this area. I think it's going to reject and fall down. So that's what I'm waiting for. Personally, in this trade. Right, so going back, let me see anything else. You can see these zones. Whenever there's a price action, I'm just showing you examples of price action. So this would give another one. See, it broke out the zone, and then there's a nice rejection. And look how many wicks. You had like lots of opportunity to enter in this trade to the upside, and you would have made at least 30 pips. Or depends if you had your stop loss at the bottom of the zone. I would have, if I seen this and in the rejection, my stop loss would be about the bottom of the zone by about 10 pips. My stop loss would be about here, would be my stop loss. And because look, it's a good area, or you can have 5 pips or 6 pips, but sometimes depends my position. Say if my position, if I entered here, I would put a 20 pip stop loss, or here, okay. But if I entered below, say if it were entered here, I would enter maybe a 15 pip stop loss. Depends where you entered. You just need to position it below the zone and have it either 15, 20 or 25 pip stop loss. Right, so you can see back here, where was it? Yeah, here, rejection of this zone and then fall down. I think I showed you that one already. So this is a trend line going down, and breakout of the trend line. So breakout, and then it was like a dodgy, but the dodgy candle, you see it didn't touch a trend line, didn't come back into a trend line. This is also a confirmation of a breakout of the trend line. They say that the big hedge funds or institutions, if they have a 15-minute rule, that means if it's out of this trend line for 15 minutes, then and it's not coming back and touching the trend line, then it's end of the trend. So that's another rule that they have, but it's always, you can take that rule, but don't like trade it like biblically. Just give you an idea of, sometimes if you see this, you know that it's going to be not going to trend down anymore. It could, you never know, but it's highly probable it's going to start going up after this breakout of the trend line with this wick. So I can draw another trend line here, see what happened here. Here's another trend line, true trend line, and you can see definitely true. It's been, look at that, hit here, my true trend line, bounce, oh, not quite hit. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bounces. You know, so with binary options, my old style, I would have got 11 in the monies from that trend line. For me, I just attack trend lines and resistant lines with binary options, not forex. But you can see, attack, we've made it like 11 in a row, and then it broke out here, and then it was rejected to come up again. So, and it was in a zone, so this could be an indication to go up in forex, which would have got 240 pips. I actually didn't get into that trade because I don't know, I was thinking it was going to come down, and then I didn't get the opportunity. I must have been busy or something, but that looked like a nice trade, but I wasn't in that, unfortunately. Hang on one second. Okay, so that's the way that I do my price action in the zones. You know, occasionally I would set pending orders. I would set pending orders if it's hitting like Fibonacci trend line and the zone, then I would set a pending order. But other than that, I'm not setting pending orders. I'm waiting for a price reaction within these zones. So if you have any questions, feel free to message me on Facebook or within the BBIT community. And that's everything. Right, Jimmy G, out.